Japan's Nikkei is trading down 0.6% in trade.
60,000 crores are going to be given by buying bond.
There is no clear-cut way forward from here. So if you're trading, you'll need to be mindful of all of that.
If you had to bet on one sector to do well today, it will have to be the banks and the financial.
Last quarter, we couldn't convert close to about 100 crores of orders in the industrial.
It's green for now, 0.5% in the Nifty. Nifty Bank is up double of that, about 1%, 48,500.
Well, we'd like to confirm that at an operating profit, this has been a record quarter for us.
Annual recurring revenue saw an uptick of 7%. This came more or less in line with the street's expectation.
Mid-cap, small-cap suffering a crunching blow. The mid-cap index down 1.5%.
Bajaj Auto, we are expecting a subdued set of earnings. For TVS Motor, we are expecting a steady set of earnings.
Donald Trump saying that he had a productive phone call with Prime Minister Narendra Modi, who would be visiting the United States in February.
The broader markets are the story of the day, a sharp recovery from the lows of the session.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Looking much better as we get into the last 60 minutes of trade. That's the picture as compared to what things were in the morning. The first couple of hours were absolutely dreadful. This is Closing Bell. I'm Prashant. With me, my colleagues Surabhi and Rima here. Nigel is joining in from the newsroom floor. Guys, hi, good afternoon.
Hi, good afternoon. And absolutely, it's that mid-cap recovery, right? That's the most heartening, and we'll talk about it as we go forward. It's a big climb for the mid-cap index from the lows that we were looking at, say, around 11 o'clock.
I mean, absolutely. And I think, in the morning, it was 10:1 declines to advances. And that is now some 2:1. So that is essentially the extent of the recovery. So for every 10 stocks down, there was only one up. Now it's a little better, although it's still down and out. I mean, I think that says a lot. I mean, large caps, there you go. That's what I'm talking about. And actually, it's closed out even more as we sort of came into the studios, and I looked at that number about 10-15 minutes back. It was looking pretty poor in the morning early on. Small cap index, for example, was down almost another 4% today. And I think now it's down about 1.6, 1.7%. Mid cap index is down about a quarter. It was down 1.7 in the morning. So across the board, I mean, no questions asked. There has been decent recovery. The Nifty and the Bank Nifty, of course, are surging. That RBI sort of help on the liquidity front certainly helping. Both are holding not very far. So Nifty is very close to its 40-hourly average, which is about 23,100. We are at the 40-hourly. With this surge we've seen in the last, I think, 10 minutes or so, we are maybe a couple of points above the 40-hourly exponential average. The Nifty Bank, that level is, I think, about 1% away, less than 1% away. So those are the first initial levels to take out. Hourly averages, then we'll have to sort of build on from there. But good to see. In the mid-cap space especially, there has been solid buying at lower levels, I think, which has gone on after the initial 11 o'clock cutoff in terms of margin calls, etc., was in that sense out of the way. So good-looking screen. It's all relative, but it is good-looking relative to what we saw in the first few hours. Rima.
Well, some of the earnings have also been positive. So TVS Motors is up nearly 5% now after reporting a margin beat. Margins have expanded for the company by 70 basis points, top-line growth at 10%. And the street has given a thumbs up. Steady set of numbers. The street likes it. The other one is Cipla. Again, a big net profit beat on Cipla, and the stock has gained close to about 3.5%. But a bulk of the heavy lifting is done by the banking stocks, particularly names like an ICICI Bank, HDFC Bank, Axis Bank, IndusInd Bank. These four banks combined are contributing way more than 200 points on the Nifty, and the Nifty itself is up close to about 300 points. Now closer to 240, 250 points in terms of a contribution coming in from the large cap banking space. The Nifty banking index is up nearly 1,200 points. It's pushing up the Nifty by 300. The Nifty's at or above 23,100 after hitting a low of 22,850. So from the day's low, it's recovered more than about 250 points on the Nifty. The sensex is surging. And of course, the mid-cap recovery is what we've been highlighting.
Absolutely. And the mid-cap recovery is, is taking shape on the back of some positive earnings that have come in the last few minutes, or some positive result reactions that are playing out, and also brokerage commentary. I'll give one or two stocks as examples. Look at Balakrishna Industries. In the morning, Balakrishna Industries had a strong upgrade. This was a Nomura upgrade. Their price target is 3,242, which is still substantially higher compared to where the stock is right now. So that's helped this one. There's Chola Investments. That is a CLSA call. CLSA is extremely optimistic. Let me quickly check CLSA's target. They are saying 1450 is possible on the stock. So the market's taken note of that. So some of that positive commentary is definitely working. And then apart from this, there are other stocks that are recovering that have had such a difficult last few days or weeks. So those are also on the upside. There's some of the realty names like Sobha. I saw MobiKwik move up on the screen as well, which has been absolutely battered in the mid-cap carnage of the last couple of days. So a lot of pullback on several of these stocks. There you go, about 7.5% higher there as well. Nigel?
Well, that's right. I just was, as you were doing that check, I was going through the list, and there are more than 15 companies that have recovered 11 to 12% from the lows of the day. So that's the kind of recovery that you've seen. Stocks like Stovecraft, massive recovery is what we are seeing out there, just to name a few of them. Just a couple of factors here. We have the sensex weekly expiry that's playing out, so that could be an added element. And we know the FIs are net short positions. The absolute number appeared like it came down, but remember the lot size is changing, which we had highlighted this morning as well. So this market is net short. If we don't get more negative news, you'll have to back your chances that maybe the near-term bottom could be at around 22,500. Too soon to call it. We have a big event that's coming up in terms of the budget, but at least for now, the screen is looking way, way better, as you all mentioned. More than 1,000 stocks advancing as we speak. Mitesh Thakkar joins us to help us out with the trade right now. Mitesh, what would you do? A good recovery from the low point of the day. The Nifty is holding above the 23,100 odd mark. The Nifty Bank bazooka move out there, 1,200 points higher. Where is it headed?
So, Nigel, since the morning, I was recommending to go long on Nifty Bank. The Nifty joined the party a bit late, but at least it's there. One thing which it has done is that it's kind of filled the gap which was created yesterday or Monday. And, with that, the target on the Nifty now is back to 23,350, 370 zones. Beyond that, we'll look at a stronger uptrend. So at least another 200, 250 points could possibly happen on the Nifty index as well. As far as the bank Nifty goes, I gave a target of around 49,700 as the second target. I think the first has already been met. So 49,700, 500-700 zone looks to be the next area where the bank Nifty could head towards. And possibly, that could mean that looking at the price action, at least a temporary low is in place. We're still not sure of a bigger trend reversal, but it looks like, the lows which we made yesterday should be there and it should hold out for many days to come.
Let's get to your stock calls then, Mitesh.
So, I've already recommended the large cap banks. What has come on the radar recently is some action happening on the charts of Hero Motors and Escorts. Hero Motors extremely oversold. I'm waiting for a reversal to happen, which should happen once the stock stabilizes above 40-50. We're about 10-12 points away from that. So buy about 40-50 for a target of 41.10 to begin with. Eventually, I'm expecting 41.60 as well. And keep a stop of 40.24 then. And Escorts is another one that's moved very strongly on the upside. So buy here with a stop below levels of 34.60. And look for a target of around 3,600.
Okay, all right. Got that, Mitesh. Thank you very much for the details over there. Let's now move and look at the immediate numbers that have come in just the last 1 hour or so. And Cipla is a very positive one. It seems like a top-down beat because almost every parameter they've managed to beat expectations on margin, on profits, on the revenue itself. In fact, what we are talking about is about a 7% growth in the top line. And the margin has expanded to over 28% now from what used to be 26.5% same time last year. So there's a decent margin growth that's come through. So what are the factors at play and what's the outlook? Well, we have, the analysts from Centrum Broking now joining in to sort of take this forward. Sumit, if I could just come to you for a quick first cut, how do you rate the US business and what do you think has powered this beat?
Hey, hi. Thanks for having me. So US were more or less in line with their estimates, the sales number, but however, if you see the margins of profitability overall has been delivered a robust beat. And if you see Albuterol market share has reached 21%, while this quarter was slightly offset by a bit subdued performance in the lanreotide. So going forward also, we expect this particular performance to continue, and this overall margin gate is measured led by the US business, and we are positive on it.
Sumit, there is an upside risk to the margins, right? For the first 9 months, the company's delivered EBITDA margins of 26.9%, which is ahead of their full year guidance of 24.5% to 25.5%. So, will the company end with margins better than their own guidance, and will that result in EPS upgrades?
Yeah, I expect some bit of margin, like the overall guidance, to be revised upwards. However, let's see what they say on the call, but I am positive on the overall performance.
Absolutely, we'll get to the revisions after you listen into the call. But as of now, what's the kind of top line growth and what's the kind of exit margin expectation that you're working with for FY25?
So overall FY25. I'm expecting around 7 to 8% kind of top line growth, and the margin of it around 26%.
And just to wrap this up, how does it compare to some of the other larger generics players which have a good US presence as well? I mean, where is Cipla in your pecking order when you're talking about large cap pharma?
So Cipla is second after Sun Pharma. So it is one of the topics under my coverage.
Thank you very much for joining in. That's the word coming in on Cipla. The press conference is at 3 p.m. Vinny will be listening in and giving us key highlights from that media briefing. By the way, on the mid-cap end, Anant Raj is down nearly 20%. Keynes Tech is another big loser, 14% lower. There was a guidance cut there. Other than that, CDSL under pressure for the second day in a row, but BNK has downgraded its assessment on CDSL to a sell. So under pressure there. PG Electroplast, Premier Energy, these were big winners of last year, trading at high valuation multiples, and these stocks are correcting. Mehraboon Irani is now with us on the show. Mehraboon, the kind of sell-off that we had in the mid-cap, small-cap index was down 3.5–4% at one point of time in the morning. Was it capitulation, and have we seen the worst, at least for now?
Well, everything as of now looks corrective in nature. The short-term bottom could be in place as far as the Nifty goes. I think my view has been quite consistent that the first half of 2025 is going to be tough. Honestly, it turned out to be a gross understatement. I think we need to try and relate to all those new investors who came into the market post-2020, and the number of investors has gone up at least 5 to 6 times as compared to pre-2020, and look at the state today. They never knew what a bear market is. They never knew what a fall is. Every fall, rally used to happen. This time, they have started to lose their steep. In fact, quite a few people are feeling that, oh, this was not the best place to come. And we were all living in the dream that every day we can make money. So it has been a hard blow to them. Forget them. I think even experienced investors like me and you, I think who have been in the market for the last 20 years, I think we have not seen a fall in our portfolio of nearly 20% in just over 1.5 months, which most of us today would be suffering. The point is it over? At the moment, your question, the answer is everything seems to be corrective as of now. Short-term bottom could be in place for the Nifty. But what is this Nifty? When the Nifty went up, what did we say? Let's be very honest. Our stocks are doing better than the Nifty. Now, when the Nifty has come down, we are saying, why look at the Nifty? Look at our portfolio. They're all deep in the red. So this is the problem that the market is facing right now. And the way FIs went on selling, the problem mainly was corporate results. I still believe it's corporate results. The main, I would say 75% weightage I would give it to that. If corporate results improve, everything else takes care of itself. It was earlier geopolitical problem. Now it's Donald Trump, global trade, Indian currency, whether China will devalue its currency post-tariff, what will happen to the Indian rupee. All these are variables which are very worrying. I'm not saying no. And so many variables are there. What will happen to global trade? Will the government and the finance ministry take steps to take care of exports? Because Whole lot of supply chains can get dismantled here and there. So these are all concerns, and when all this type of concerns are there, it's not easy, and I cannot be a soothsayer to say as to whether we are bottomed out. But from the Nifty angle, it's distinctly possible the short-term bottom could be in place. Let's keep our fingers crossed on that. The broader market has to participate. A main trigger now could be the budget. In the budget, if there are positive surprises like, I would say, very liberal cut in personal income tax and a sharp hike in capital expenditure, that can make the markets feel a little bit amused all over again, followed by the RBI policy. As far as the RBI goes, they did the right thing yesterday. Let's be very honest with the fact that as of now, the RBI measures have throttled liquidity. And liquidity is the lubricant, which lubricates the engine. And over the next 6 months, this liquidity measure announced yesterday will play its own game, and hopefully things for the Indian economy and for the corporates and for the Indian markets will look much better maybe 3 to 6 months down the line.
Okay, all right, got that, Merbun. And as you said, global cues aside, you want to see good earnings. And we got that from TVS Motor. So I want your view on that for the time being. Let's hop across to Sudarshan. He's here to dissect those numbers. Sudarshan.
So in this challenging environment where demand remains a concern, TVS Motor has come out with a healthy set of earnings. So what are the positive factors that have supported the earnings? First one is volume. In Q3, volumes have increased by 10% year on year. And second is there is a sharp drop in raw material cost per sales. In Q3, raw material cost per sales have come down by 211 basis points, and EBITDA per vehicle is healthy at 6%. Now, some of the negative factors, first one is realization has come in line, but it's flat both sequentially and year on year. And second is low margin product, that is electric two-wheeler. Sales of electric two-wheeler have surged almost 57% in Q3. Third is high margin product, that is three-wheeler, and sales of three-wheeler have fallen by 24%. But overall, coming to the numbers, profit has increased by 4%. Revenue has gone up by 10%, EBITDA has moved higher by 17%, and margin has come in at all-time high of 11.9% versus 11.2%. So overall, it's a strong set of earnings from TVS Motor in this challenging environment.
Got it. All right. Thanks a lot for that, sir. Merbun, what do you make of these set of numbers? The stock actually could be some pre-positioning as well, but the numbers look good, and the stock is at the day's high.
I think the market has given a proper thumbs up, justifiably so. I think not only the margins, the company is proving itself that it is positioning in growth categories, is keeping on improving. And while we have looked at the Bajaj Auto and the Hero MotoCorp, let's be very honest about it. And while the former has really delivered well, Bajaj Auto, I think TVS Motor was somewhere a third type of stock we were looking in the two-wheeler segment. And from that angle, I feel the company has done quite well. In fact, I heard the management in the recent past, and they also sounding upbeat that demand momentum is picking up. That's a big thing. And if you have measures in the union budget in which people will have more money in their pockets to go and do some discretionary spending here and there, why not? The stock can go further. My only reservation, Nigel, if any, is the valuation. See, let's be honest, we've blinded by the fact that companies are doing well and we are given PE ratios of 50, 60, 70, 80 across many sectors and many stocks. Auto, 50 times or 40 times, I don't think it's very cheap. I am in fact saying that TVS Motor will do much better going ahead. I think 2026, my expectation will be around an earning per share of 75 rupees. At the present price, the stock is definitely not cheap. So it's a stock, if I'm owning and I'm happy with the performance, I may continue to hold. But to put fresh money in a market and where there are so many variables at the present level, I think it requires more than guts to buy into it. So if somebody wants to buy into it from a longer term angle, he should be ready for some hiccups here and there in the event of the broader market correcting again or falling again. But otherwise, if I'm holding the stock and it's a proxy for me in the two-wheeler segment, I don't have too much of reservation with my own holding, if I have any, or with any investor holding it. So you ask me, should I sell off TVS Motor? I will say it's certainly expensive, but the company is doing well. If you want to sleep over it for the next 1.5 years, you will definitely get a better price. But putting in fresh money in this market scenario, I would certainly not advise anybody to do at the moment.
Okay, all right, got that. Merbun, good to have you on the show. Good listening in to you. Finally, my question is on this hot debate around EMS. And there's been a lot of high drama. I remember even when Dixon's numbers came out, The market was suddenly fretting over their margin. Though we've known their margin profile, it'll take some time to pick up, by the time the newer businesses come on stream. And then Keynes today. Keynes is talking about investing in other additional areas. That's why their employee costs have gone up. They're still promising that margins will improve next year. Market's not listening to any of it. Your thoughts on EMS and the mood change around this theme now?
Surabhi, I think if you like this space or anybody likes this space, I would like to pardon myself for what I'm going to state next. I track this sector across Asia, and it's the multiples with the stocks are demanding right now. I have never liked it. So I would say a safe bet from my side. Full disclosure, I don't own any EMS stocks at the moment. I would say that long term, I see the stocks possibly at the same level at which they are right now. So you may take your call as a trader, a quick 10%, 15% up move, downside, this, that. But maybe 2-3 years later, you see it. The stocks, because of the valuations they are at right now, I don't see them doing too many things. And I can tell you there are quite a few good companies, good stocks, which I had said the same thing maybe many years ago. People liked it. Like example, in a different space, I'm saying a company like GMM Pharma, wonderful company. When I was asked this question 5 years ago, I said this stock will be the same price where it is right now. In fact, maybe 50% lower. And it happened that way. I don't have any problems with the company. Even this EMS companies, quite a few of them are very well managed. But at this multiple, I don't think there is any big money to be made over the next few years. The stocks will move up, down, and for all you know, you will get at the same price some years later. This is my personal view on the EMS stocks.
Wow, so they've run their course perhaps, and they become, we know of value traps, maybe they could become growth traps is what you're saying, given the elevated prices at which they've been trading. Got that, Meraboon, we'll remember that and keep that in mind. But it's been great having you on the show today. Thank you very much for joining in. Wish you a good rest of the day. We have to move on now. It is time to talk about the Growth Code, which is an initiative by Grow and CNBC-TV18 designed to provide you with valuable trading strategies. This week, SEBI's whole-time member Anant Narayan shared his insights on the newly introduced F&O trading guidelines and the rationale behind them. Take a look.
Overtrading, particularly on expiry day index options, was creating the possibility of more systemic risk with an increase in the overall market risk right up to the time of the expiry. So these two areas, one is a systemic risk area, the other of related to investor protection, is something that we were looking at closely, and we were consulting with market participants for months together. Our consultations told us that the issue really boiled down not to the broad swathe of derivatives, but specifically to the issue of index options trading on expiry day. So it is a very clinical approach that we subsequently adopted, essentially to address this specific issue of overtrading in index options on expiry day. On October 1st, 2024, we announced a series of 6 steps to address this. 5 out of those were directly aimed exactly at this, curbing overtrading in index options on expiry day. Now, the impact of those steps are still playing out. We will watch the data very closely to see how things stabilize. As and when we come to a conclusion on what the impact of these 6 steps have been, if further steps are necessary, both for market development as well as for investor protection, we will take steps accordingly. So at this point of time, nothing is planned. We will see what the data shows, and then we will take the steps further. But there should be no doubt about SEBI's broad objectives here. We want a sustained F&O market that is conducive to capital formation in the country. At the same time, we want to ensure investor protection, and we want to ensure systemic stability. And we will continue to work along these lines in consultation with all market participants.
All right, welcome back. 140 points, which means, the market's actually given back a little bit, right? We were up 200. We're cruising along nicely. And there's a sharp fall, actually, which has appeared on your screens now. So let's just take a look at this. So 250 or so, essentially, is where the sell-off started. It's about just 5 or 6 minutes old. This pressure that we've seen. This is sort of expiry related. One doesn't know. That's got to be a factor perhaps at play. If you remember last week, you had that absolutely manic kind of an expiry day. Almost about 50-60 points off from the day's high on the Nifty is what we have seen. But just under 23,000 now, after being above the 23,100 odd levels. Well,
Midcap index is, by the way, in the red. That's down about 0.25%, and the small cap index is down more than 1%. So the sell-off is quite broad-based down.
Yeah. Okay, let's just get Aditya Sood, fund manager at Incred Asset Management. Aditya, good to have you back on the program. Thank you very much for your time. Everything has come off to varying degrees. Some more, some less. I guess one can only take comfort if it is less rather than more. Let's just talk about how what your portfolio is kind of fared. I remember we were speaking about Tejas Networks, and you were very bullish on it. Stocks come off to about 860 odd levels now. Where is it trading at in terms of P multiples? Just give us some sense. And this is the thing, right? I was looking at, for example, Tejas, you do speak about, but I was looking at CG Power, for example, right? It's come off sharply. Market cap is about 1 lakh crores. It's about 80,000 crores. I was looking at conservative profit estimates for 26 at about 1,600 crores in profits. So it's still trading at about 65 times. In that vicinity. Is that acceptable? What should be acceptable is also a question, because we've had almost a decade of high valuations. Go on, Aditya, and answer that in the context of Tejas. Go on.
Yeah. I would say that it really depends on the framework that you follow, whether it is acceptable or not. Generally, our framework has been more skewed towards value and growth at a reasonable price. In context of Tejas, the story was that, essentially nobody really believed that they can have, earnings profile of, 500, 600 crore of, profit is going to flow through. The problem, I think so, is not with the earnings in Tejas. Essentially it is trading at 25 times trailing multiple today. I think so it has got to do with visibility of the order backlog, essentially, because nobody believed that, this company was essentially acquired because of fiber to home potential. And nobody believed that they can implement a wireless solution for BSNL, and they have done it in a record time. In fact, we would have initially envisaged that it would have taken them, FY26 second half to implement it. So they are ahead of the timelines in terms of that. I think so. The question that was asked on the call was that essentially that once you execute BSNL, whether there is going to be, any orders that, that is clearly a worry for the street. But a very, very simple way of thinking about this is that, if you look at the upgradation of 4G, 5G potential, it is going to be 4,000 to 6,000 crore as per us. If you look at the Railway Kavach program, it is going to be 1,500 crore opportunity. And if you look at, the fiber to home BharatNet, that is going to be a 4,000 crore opportunity. So even if we take the lower end of this range of, what Tejas is going to bag, now the good thing is that, they practically don't have any competition here for all these three projects. And they are also having proof of concept has been established for, they are working closely for the backhaul for Idea. Idea Vodafone essentially, and what we have also seen here is that they are establishing proof of concept to go global. So I think so it is a question of capability. It is a question of whether you can be patient with stocks, whether you can hold them long enough over 3, 5, 10-year period. As I've pointed out in the past, that Tejas is very, very high in terms of, technical capabilities.
Yeah.
Obviously, they have doubled the R&D spend, and they have clearly added 150 odd.
Aditya, what about... No, absolutely. No doubting capability. What about valuations now? I mean, if you can give us a sense because, it's a... this is happening now.
Trailing, I would say that 25 times trailing is not really very, very cheap, but it is not expensive as well in this environment because the earnings are surely going to get delivered.
So about, you're saying 650 crores profits trailing,
yes.
And on about 15,000 crores market cap.
Yeah, 600, 650 crores. The only factor here now is that, significant part of the earnings is also going to be PLI. The benefit that they derive and whether you treat it as other income or not is the only debatable factor here.
No, multiple in 20s is, I think, you'll have to really look hard to find multiples in 20s, which usually is much higher. So this is... no point taken with the correction. That's a good view on Tejas, guys. Sorry.
Hi, Aditya, Rima here. Even Intellect Design Arena is a stock that you've liked in the past. I don't know if you still own it. But here, while the valuations are reasonable, the stock hasn't done anything over the last 3 years. In 3 years, the stock is only up about 13%. So what are you doing with such stocks?
Yeah, so I think so you have to give companies time. We have to read through capability of the company. Essentially our expectation is that, North America has been a very, very difficult market to break into. So if you look at, any product company which is coming out of India, whether they have done justice to, break into North America, I don't think so you have a real champion here. But the markets that they operate in, be it, Middle East, be it India, be it, Southeast Asia, one of the key factors contributing to Intellect's success has been that their customers would be the top 3 banks in those geographies. So I think so this is again an example of huge operating leverage which can play out. They have started to get some success, very initial success. For example, with the credit bureau in Canada, which they announced. I think so this year is going to be very, very critical for Intellect success because we expect that they would bag some customers in, North America and get a proof of concept established. And then, I think so the gates would open. So again, reasonably priced. We don't see a real risk of earnings getting cut here.
All right. Hi, Aditya. Good to hear your thoughts and, on all these stocks as well. The other one that you all were in very, very early is Newland Pharma. The stock, I think, was 18,000 bucks. It's come down to 13,000 rupees. Obviously, I think you all got in much earlier as well. What's your view on the entire pharma pack, which has suddenly started getting very, very nervous? What Mr. Trump is going to do next with regard to funding? A lot of these pharma stocks have corrected. Your view on Newland as well as the pharma pack, what do you like?
So on a top-down basis, I think so this is one sector wherein we have seen 7 quarters of double-digit earnings growth getting delivered. And I think so if you have to rank the sectors by earnings growth, pharma would be just up there. I think so still we are expecting from the entire pack, we are expecting a 19% growth to get contributed. Now, the question is that, what to own in the pharma pack. And we have been very, very skewed towards, this contract development and research CDMO as an opportunity. I think so. Again, there are very few companies wherein we have seen, top line leapfrogging and bottom line improving very, very sharply. Just to give you some perspective, 4 years back at the bottom of COVID, possibly, Newland used to do 100 crore PAT. They ended last year with a 300 crore PAT. Our expectation is that next 2 years, they'll double the PAT number, let's say 2.5 years broadly. Obviously, they have a very, very large opportunity in terms of this novel drug for schizophrenia, which is a Bristol-Myers Squibb drug known as Cobenfy. So I think so this could be a $300-500 million opportunity in terms of top line with 70-80% gross margins over next 5 to 7 years. Now the good news is that Newland is working on novel therapies. Very few companies have been in a position to have this kind of a track record that they have, and I think so they have 5 such molecules in the pipeline. So it is going to be purely dependent upon whether they are in a position to execute. Now, Newland also, in last 10 days announced a very large capex on 1,000 crore gross block. They are adding 300 crores. So that leads us to believe that obviously they can see the pipeline, and this is going to be a very interesting stock to own going forward. So on the CDMO space, in fact, we like this space a lot. The problem has been valuation in this space. So again, if I have to rank companies on capability, if I have to benchmark Newland's valuation to a Divi's or Syngene, I think so Newland is still the cheapest stock in this space with the highest return on capital employed profile and highest margins.
Okay, all right. No, absolutely. And, these are some of the stocks which Aditya has in his portfolio. And, interesting times here. Anything else, Aditya, which you're looking at closely, which has fallen because, stuff has come off sharply across the board. Things you don't already own, but it's on your radar?
Sure. So, our framework there has been that, we will look at the sector, when there is a price to value gap. Clearly, I think so the highest amount of pain, if you talk about, any sector today within financials is in MFI space. We have held Credit Access Grameen in the past. We believe that it is the best managed MFI in this country. So we are looking at it, with a very, very close lens. We would like to believe that, this is a sector which is going to, because it has fallen so much that it is creating, interesting opportunities. So we are looking at, companies which can manage the credit cycle well. There are only, a handful of names which have been in a position to report profit, wherein the sector has, suffered a lot. So that is one space that is looking very, very interesting to us. Obviously, financials post OMO, RBI OMO, obviously, financials could rally, which was clearly, getting reflected in the Bank Nifty performance as well. We have recently added Axis Bank. We believe that, it is very reasonably priced. Even if you look at, Federal Bank, which has been a, 5-year-old stock for us as a holding, I think so the management is now focusing more towards granular deposits. Advances, I think so they are more focused towards the high yield sort of market, wherein we believe that, they are focusing on the profitable buckets. And obviously, they have been very, very prudent in terms of, provisioning as well. So that is something that we like. They are being conservative as far as provisioning. And obviously, the stock is reasonably, priced. It is trading at 1.2 times price to book.
Okay, so added Axis Bank recently. Federal Bank has been a long-term holding for you for more than 5 years, and you're watching MFI stocks, something like a Credit Access Grameen, which you've held in the past post the recent correction. Thank you very much, Aditya, for joining in. Get into a break. As always, on the other side, we'll get you a check on what dealing rooms are saying in our segment East Street Chatter.
Welcome back. We're up 100 points, but it's much, much lower from the start of the show. So from the start of the show, in fact, we have fallen close to under 150 points. That's not the problem. Pull up the advanced decline ratio. We had more than 1,100 stocks that were advancing just around 30 minutes ago. That's come down to around 720 stocks. So those crisscross lines tell you the picture. Nimesh joins us, and this time around, he's saying he's not going to tell us what he's picking up in D Street Chatter, but some stocks as well. Nimesh,
well, you pushed me yesterday, right, to talk about stocks as well. So I thought today let me do that as well. But okay, on the markets first, a decent recovery, I'll say, Nigel, from a very extremely oversold levels. But again, the FI seems to be better sellers, so the number will look reasonably large on the sell side from the larger FIs. That's overall feedback. I guess a bit of pullback in the broader markets as well. But again, it's very, very selective. You've seen massive correction in the broader market names in the last, 2 weeks or 3 weeks or so. So that pain doesn't look like it's over yet, but there is some signs of buying interest coming back. And I'll talk about some names as well where there is some FI buying. So it looks like some bit of interest is back in the broader market as well after the carnage that we've seen in the last many days. I guess today's rally is largely led by financials, and rightly so. The RBI move was very, very important and very needed, and you're seeing a reaction on the bank names and the NBFCs. Also, if you look at the reports, this is a clear precursor to a potential rate cut in the Fed policy itself. So that is the reason why the financials have seen a bit of a rally today. NBFCs are doing good. Large banks have done well today, and there is a bit of buying as well. So a bit of shift is happening towards financials for sure, and this could be the year wherein the financials do a bit of outperformance and heavy lifting. So that's the overall feedback as far as flows are concerned.
Nimesh, that's a very important point you're making, right? Because we know we have a problem, and you have one part, the regulator that's saying let's ease some kind of monetary stimulus, which is good. Now, hopefully the budget as well realizes there is a slowdown. Let's give a capex boost. That's the hope.
That's the hope.
But tell us what else you're picking up.
So again, technically, I guess, as we've been saying, this 22,800 is a very crucial support on the downside. We've respected those levels yesterday as well, and today we've seen a bit of a pullback as well. So that's the level in the near term to watch out for. But given the expiry this week, given that we are so oversold, a technical pullback is pretty much on the cards. But as you rightly pointed out, after the RBI move that is done, I guess next eyes would be on the budget, and if there is something in the budget as well, you might see this recovery to happen, at least for the time being.
Indeed, but you promised us some stocks, so let's get straight to that.
Sure. So in terms of individual names, as I said, there are a couple of stocks which are sharply beaten down, and some bit of interest is back from larger FIs. So Samudra Motherson and Varun Beverages, these are the two names where there is delivery-based buying from larger FIs in today's market. So some bit of support there at downside on those names. On the flip side, GAIL and GMR Airport, while the stocks have recovered from the lows, there is still supply in these two names from larger FIs. So expect high delivery volumes, but at the sense side, in stocks like GAIL and GMR Airports. In general, I guess there is still some bit of selling in the PSU names. The third stock is Siemens. Well, there's a big upgrade from UBS today. They upgraded the stock to a buy. The target price of 8,000. The stock is still under pressure, largely because there is selling pressure. So even after the recent underperformance, there is supply, though small in terms of size, but there is supply from larger FIs and Siemens in today's market. And the last name is OneSource Specialty. A recent listing spin-off from Strides. That stock is under pressure, down 5% down circuit. But I understand there's going to be a large block in OneSource Specialty very soon. It looks like the promoter entity could be the potential seller in that large block.
Nimesh, blocks are not stopping even though market has come up. But there's a block after a while, right? Since the correction really started.
I guess that's also because, Prashant, that's also because a lot of, there was a lot of cool-off period for a lot of the promoters, right? So now that the earnings season is getting over, some of them can actually go ahead and do the blocks.
Absolutely. Nimesh, thank you very much for that. 130, by the way, on the Nifty, which means about 100 points off the highs. Mitesh is with us with what he'd like you to do in terms of near-term trading ideas. Mitesh, first a quick comment on the drop-off we've seen in gains. Last time we spoke, I think we had about 220 on the Nifty, 130 now.
See, on the index, my idea is very clear that we seem to have been giving a lot of evidence of a bottom being in place. So we have slightly come off the day's high, and the Nifty is yet to convince me. The Bank Nifty pattern does look like, that the markets will go up. So we'll trade with long bias. Maruti is something which has come on the radar. It's just closing above its 200 average and near the day's high. So BTST here, keep a stop at 12,085 and look for a target of 12,200, possibly even higher, in case nothing negative comes in. And the other stock which I have on my radar is a BTST on Bank of India. Now that's done very well in the last few days. In fact, it's one of the outperforming banks in the PSU banking names. So BTST here with a stop at about 108 half for targets of around 112.
Okay, all right, Mitesh, got that. Thank you very much for the details over there. You have a good rest of the day. Catch you with the market tomorrow. By the way, Cipla is saying this is not going to last. The margins, that is. This level of 28% that they've reached in Q3, which is above expectations, it's much higher. It's 150 basis points higher than last year. They're saying it's not going to sustain. And therefore, the stock price is also not sustaining. Seeing a bit of a cool-off. Cool-off not only in Cipla, watch the Midcap index. Again, negative. A lot of volatility. The Midcap index is down 0.5% once again. Pretty sharp drop on that index as well. So there we go. But I guess it's going to be all eyes on ITC.
Yeah, before
tomorrow.
that, the small cap index is down 1.8%. So the drop-off has been even sharper for the small cap index. But as we said, ITC, demerged hotel division, ITC Hotels, is all set to make its D Street debut tomorrow. Manglam is here with the details. Manglam.
Right, first the announcement, then the ex-date, and now finally the listing. That's what everyone's tracking for ITC Hotels D Street tomorrow. It's not a debut by being in the listed space per se, but for the first time, ITC Hotels lists as a separate entity. 140 hotels is what they have right now, 13,000 keys, nearly 45% owned properties, 55% managed, and they have a stated objective by 2030 having nearly 200 plus hotels along with 18,000 keys and 65% managed portfolio as well. What happens to this business? It lists, it's seen a sharp growth in revenue, close to 1,500 crores in the first half itself, along with 28% margins. Post-pandemic, the last 3 years have been fairly good for the hospitality sector, of which ITC Hotels has been a big beneficiary. The stock that lists tomorrow, the company has zero debt with cash balance of 1,500 crores. A fair amount of headroom for growth because only 20% of its inventory is operating at 75% of potential occupancy. Capex at around 8 to 10% of revenue, looking for value accretive M&A and alliances as well. The question, how do you value this company? If you assume that this year they do about 3,700 crores of revenue and 1,200 crore of EBITDA, and by FY26 they do about 4,400 crore of revenue and close to 1,450 crore of EBITDA, and apply to them the multiple that is between Indian hotels and chalet hotels, anywhere between 26 to 28 times, then you come up with the ITC Hotel entire merged entity close to around 39,000 to 36,000 crores in terms of an enterprise value. But remember, 40% of this will be held by ITC itself, so you have to remove that 40%. The value per share of an ITC business, the hotel business, on ITC share was 17 to 19, listing price between 175 to 190. But tell you what, you have a reference rate as well. ITC share adjusted by 26 rupees on the ex-date, which implies that the last discovered price of the hotel business is 260 rupees per share. Will that price actually be the one that is discovered tomorrow or not is the big question. But thereafter also, we'll have to keep an eye out on some of the passive fund flows as well. The stock is expected to meet criteria for inclusion in the MSCI Global Small Cap Index as per Nuvama Quant. And remember, because it's a demerger of a Nifty company, it's been part of the Nifty itself. 3 days after listing tomorrow, it will be expelled from the Nifty. And when that happens, there will be $100 million of outflow on Nifty expulsion and $65 million of outflow on sensex exclusion as well. So those are a couple of factors that we'll keep an eye out on. The street values it between 170 to 190. The ex-date values it between 260 to 270. Let's see where the stock lists tomorrow.
Okay, all right, Manglam, we'll watch out for this interesting development. Amidst all the earnings news flow, we also have something new to watch out from the ITC stable. With that, let's move on back to the market. We have Jay Bala of Cash the Chaos joining in on this leg of the show. Jay, great to have you on as always. Actually, I was thinking about your Nifty target just yesterday when the market was in this one-way vertical decline. I mean, and I must, give you credit because you had started calling for this well in advance. A retest of the June 4 low, the election day results low. Now, we didn't quite get there, but it's been scary to say the least. Today is a day of some recovery. What's your prognosis on the Nifty now?
Thanks, Ruby. Good to be here. And see, the market's bounces are quite weak, and they're not even getting to the nearest resistances. I had projected 23,650. The market went only till 23,450. And it's, despite what people call a bazooka today, the markets aren't doing much. So that's a sign that, at least a warning sign, the market, if you try to break the support at 22,600, it can accelerate lower. we are within the pre-election levels. So we just have to get to the post-election levels. So I think it's a matter of time. And the fact that the US markets yesterday have started turning, and it's tech stocks which are turning. Like I pointed this out in October, that NVIDIA is coming to a very significant top, and it's likely to drop to about 74. So, yesterday's reversal for the US techs might be just day one of a large correction that's already started. We'll get a confirmation if NASDAQ drops below 2,500. So the global macros are also starting to weaken. That can put pressure on the strongest sector, which is the Nifty IT index, which is not yet broken down. So watch out for more signs of negativities coming through. We want the markets to bounce, but it's not bouncing. So that's a warning sign for the market.
Jay, hi, afternoon. But banks, the Nifty bank, is that showing some relative strength?
Just for the day, I mean, if you look at the price structure, it's not even coming to the nearest resistance at about 49,920. It's not even getting there. The resistance are at 49,920 and 50,400. I think that will put brakes on this, whatever trigger the market is getting from the Reserve Bank of India. So I think it will be a fleeting one. So SBI, like I pointed out a couple of weeks ago, it's got steep drop potential to somewhere to about 550. But we'll watch out for it. We need a little more rise to come through so that we can put in a short call on it.
All right. Hi, Jay. Congratulations. You have been holding on to that stance, wondering when you'll turn the corner. But anyway, we're taking your view for now. I believe that you think that crude oil prices are headed higher before headed lower. So tell us what are the levels out there. In that backdrop, I believe you're bullish on ONGC?
Yeah, that's right. Crude has been a little bit difficult to trade, and so the next move is likely to see a bump up to about 79 for Brent, and probably even 80, and then resume lower below the 2024 low of 68. So I'm anticipating to touch 65, but the short term has been a bit here and there, and it's been a difficult trade. So ONGC, I know it's a very beaten down stock, but the bounce from the recent low, it looks like an incomplete bounce. So be conscious that this is a counter trend move that we are trying to play. So we have a very strict stop loss at 240 and keep an objective of 275 in the short term.
Okay, Jay, stay on. We'll have more questions for you in just a bit, but we do need to take a very quick break. Back in a jiffy. Welcome back. So that's the shape and form of the market. We are in conversation with Jay Bala of Cash the Chaos. Jay, very quickly, I mean, completely take your point that the recoveries are fairly fragile. So just let's revisit the levels. On the NASDAQ, if you could give us a target, because you're expecting that turn. So in the near term, what's the level there? And for us here on the Nifty, at what level would you be comfortable shorting again?
Yeah, that's the bounce that we've been waiting for the last couple of weeks. I'm anticipating that the level of 23,600 to 23,800 to be an ideal level for re-entry point. But if you're holding February puts, you can still hold on. When it comes to the NASDAQ, 20,500 on the cash index, not the futures, NASDAQ cash 20,500. If that were to break, that would be a confirmation that we are likely to see about 30 to 45% decline from that level. So I would anticipate that breakdown to happen because NVIDIA is signaling that, but we just need a confirmation. Yesterday's price action is a signature that the reversal is in place, but we still have important support at 2,500 on the NASDAQ index to break.
Yeah, no, absolutely. I think, Jay, you flagged off NVIDIA in our earlier chat as well, right? I mean, you've been kind of... NVIDIA and Bitcoin. Bitcoin I mentioned on all through December 17th, 24th, and 31st that it's coming very close to an important top. As goes NVIDIA, so does Bitcoin. But Bitcoin is a measure of risk on, risk off. So again, if Bitcoin were to break down, I think that will be another confirmation, another dimension to what the risk off scenario that we are anticipating to play out. But we're still having confirmation, waiting for the confirmation to come through. Jay, hang in there. We'll come back. Let me just quickly wrap out things as far as the market closing is concerned. So we'll end not at the day's highest point, but about 100 points off the day's high. So we'll got to about 24,226. We are at about 22,976. By close. So a little bit of, beg your pardon, the high was 23,137. I was wondering, 23,140 was the high, and we're at about 22,976 in that sense. So about a 90-100 odd point off from the day's highest level is what we have. The Nifty Bank will come up on your screen. Lots of gainers from the Nifty Bank, although here also there was a bit of a pullback. The high was 49,247. And we're at about, at close, 48,898 or so on the Nifty Bank. Mid-caps and small caps off the lows. The mid-cap index ending barely down. And, of course, the small-cap index recovering most of its losses, but still down over 1%. 1.7 actually lower. Market breadth actually, got much better. At about 230 was looking super. But we go home with about 2:1 declines to advances at 330. Surabhi.
Absolutely. And final tally for the mid-cap index is a cut of about 0.5%. And if we check up the small-cap index, then the cut is about 1.8%. So the broader market pain isn't entirely over. But yes, there were some good results and earnings that were celebrated today. There were some brokerage upgrades where stocks managed to move higher. And some of the badly bruised and beaten down areas of the market, that's where we saw some buying come back in. Some examples would be Tata Motors, Chola Investments, Sobha, and then, of course, the clutch of financials, J&K Bank, South Indian Bank, many of these names on the upside, but overall, still a bit fragile for the broader market. That's where we take your leave on this edition of Closing Bell. Many thanks for being with us, but don't go anywhere because Markets Forward is coming up right after this break.